Hey everyone, and welcome to this week's market update. It's September 23rd, and we're streaming live on YouTube, but as well streaming live on Facebook. If this is the first time joining us, make sure you follow us on these channels. You can choose whichever you prefer, and join us because every week we take a look at the market at this time to see what happened last week. Can we use that information to make better trading decisions today? And what's going to come up? And of course, we'll look at the charts to see if there's anything interesting happening. And if you're completely new, my name is Alejandro Zambrano. I have been in the markets for many years, trading since 2006, and have lots of experience. So if you have any questions, you're most welcome to leave them in the chat now, so we can check them out when we finish the main part of the presentation. The main part of the presentation is going to take some 10 minutes. Before we start though, as always, I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money. Okay, so what happened last week really? So last week, as you know, the dollar weakened massively against the euro, against the pound, and gold reached a new all-time high, and also stock indices. And it was quite straightforward. It's because the US central bank, they cut with 50 basis points instead of the typical 25 basis points. And the central bank is now much more worried about the labor market. So 12 out of 18 members see that the unemployment rate can go up, see risks with that. In the last meeting, it was just 4 of them. So they have clearly sort of shifted from being worried about inflation to being worried about the labor market. And they cut with 50 basis points because they are too late. They should have probably cut already, maybe like 2 months ago, something like that, with 25 basis points and then another 25 basis points now. Instead, they realized, interest rates was at 5.5%, and they realized, inflation is at around 2.3%, and they realized that this is too much of a gap, and people are starting to lose jobs, and that's why they cut by that much. And it's not really good. It's not really good at all because it just shows that they're fearful for the economy right now, which is not great. And they usually cut rates too late. There's an idea that we're going to have a soft landing, which means that some people are going to lose their jobs, but the economy overall is going to be good. But that usually doesn't happen. So people think that that's going to happen, but we'll see. I don't think so. I think it's going to be a bit more rougher. And then we have the GBP USD. It also reached a new all-time high, a new 2024 high. And the reason for that is because the Bank of England decided to hold interest rates steady. And I can understand why they want to hold interest rates steady. And it's because core inflation is at 3.6%, which is just a bit too high for an economy like the UK economy. So if they don't raise or keep interest rates unchanged, they will have this high inflation. As well, it's an island, they import a lot of things, and that means that if they start to cut interest rates aggressively, we could see the pound weakening, and then you just have more inflation. So that is what happened last week. So I think with that information, if we just jump directly to the charts, I would say that Euro USD will continue to trade to the upside. So as long as trade above 110.53, we can go up. In last week's update, I said we're stuck in this pattern, and I said if we would leave this pattern behind, we would turn bullish. That happened, and nothing wrong with booking profits last week if you're trading short term, and if you're more of a longer term trader, then if we go down a bit, I think people are going to be buying. Stops here and pushing to 112 and 113. Now this is interesting. People think that the euro area will be able to decouple, that they will be able to continue to grow strongly, or grow because they're not growing strongly, but to be able to grow independently of what's happening in the US. I think that's unlikely. But for now, people are saying, oh look, the ECB is hawkish. In other words, they don't want to cut interest rates as they're doing in the US, and that's why people are buying the euro. And this will probably continue for a couple of months until people realize that maybe what happens in the US is going to influence Europe. Here are gold prices. Here's a very straightforward setup. And you know, last week we said people probably going to buy down here for this to go up. That went off really good. You know, very good risk to reward ratio, very good trade. You know, reached the buyer around, reached straight up. Now we're looking at being bullish between 2,595 and 2,565 for the price to reach 2,618, followed by 2,650. In the long run, I think we can hit $3,000 an ounce. So I think we can continue to push up. Here are Brent crude oil prices. So Brent crude oil prices were stuck in this big wedge. And obviously the cut interest rates, you know, that could boost consumption a bit in the US. There's no question about that. And then of course we have tensions in the Middle East. You know, you probably saw the news with all these pagers exploding in Lebanon, and there's risk that that now escalates. And that is obviously supporting prices. But from an economic point of view, things are not very good in China, which consume a lot of oil. And things are good in the US, but things are deteriorating in the US. And that's why prices are coming down. So I think from a technical point of view and sort of big picture, I think we can still go lower, and I will continue to be bearish below 74.88, which is the same levels we looked at last week. Just look at the pattern, you see, it says we can go down 23%. So I'll stick with that view. And this is the S&P 500. The S&P 500 was stuck in a big wedge. That was triggered last week. And the wedge says we can go up with 5.86%. So we triggered this pattern that we looked at, and we can go up to 5,991. Now this is the interesting bit. We have seen it before. The Fed cuts interest rates and people get excited and they buy stocks. And then they realize that is not as good as it was, and then the market peaks. But this is a bit like when you're playing a card game, right? You get cards in your hand and then you have to play the cards. And they are telling us that we need to be bullish about 5,594 for this to go upwards. And if you look at it, it's a very straightforward trade idea. Nothing special, okay? So definitely bullish. Obviously, I'm highly suspicious to this. It's not like, you know, a couple of, I think it was last year, 1.5 years ago, when I said really turn bullish on stocks. It's not like that. And then let's flip back to the last chart, which is dollar yen. So this one provided us with a fake breakdown. So we traded below the 2024 low, the December lows of last year, but then we just pushed straight up. So that was a false breakdown. And the Bank of Japan decided to leave interest rates unchanged. They will probably raise interest rates in December. That is what Nomura, the big Japanese bank, is saying. And that's probably quite likely. So it's a bit difficult for now to say if it's going to go up or down. I do think if we trade below here, we're probably going to go lower again. But is it going to be an easy trade? Is it going to be like, you know, gold prices? Or is it going to be like S&P 500? Probably not. So I will give this a bit of a rest for the market trade size between these two levels. And then maybe in 2-3 weeks, we might have a better idea of what could happen next. And that's it. If you like this, you know, don't forget to give it a like, drop a comment as well. And on Think Markets as well, we have information. So we have the market, the weekly market outlook there as well. Let me see here if we have any questions. I'm not sure we do. If we don't, and you're watching the recording, just leave the comment in the end of the presentation, and then in the comment section, and then I will swing by later and see if I can help you out. Can't see anything here. Oopsie. Okay, no questions here either. Okay, that's all for me and this week. Then I'll see you guys next week, same time at 10:30 London time, 9:30 to be exact, 9:30 London time. Thank you so much for watching, and I'll see you soon, hopefully. Bye bye.